Hello, trading is closed on the 19th of July, 2021. We always begin with our disclaimer. It's my trading plan for tomorrow, July 20th, 2021. Please remember I can be completely wrong and all trades should be at your own risk. Please observe the rules of my channel. Please tell your friends. Well, let's go over our calls first. We had mixed signals. Here's what we said. Signals were mixed. Commonest thing is a gap and a prompt move outside the day's range. We certainly got that. We had the target 43, 53, 18, 95% chance it prints. When it's one of the 5%, it tends to fail in grand style. I'm actually kind of happy this didn't print because one of the things we were missing from our call for a possible top here was we didn't have a failed target. And MEJT almost always leaves a failed target at the high. So now we have that. And one of the other things I wasn't seeing was a sharp move down that doesn't give people a chance to re-enter at a low risk price. So those things were missing and now we have them. We'll add this to the list, 43, 53, 18, and we hope it doesn't print. Because if this is the top, this will print eventually, but not for some time. I always feel good when I get to cross some numbers off the list, so we'll cross off 42, 76, 52. Note the resistance right at that number. We'll cross off the ultimate target, 42, 37, 58. Note the support. We used to have a long list of targets from this year that hadn't printed. We're now down to only 4, and we came pretty close to one of them today. And remember, this ultimate target here, 41, 37, 91, I get about one failure every 2 or 3 years over the last 19 years on those ultimate targets. So we've clearly started lower. And ultimately, we'll see that price. I'm pretty confident. Just can't say exactly when. Now, there was support at the June FOMC announcement price, which was 42.3393. That's within a fraction of a point of today's low. And that number can serve as a dividing point between a market heading higher and a market heading lower. We'll come back to that in just a minute. During the day, MEJT said this drop was false, told us prices would retrace even as we were dropping, and that worked. Notice a wall into the close. Looks impressive, but it's often met by gapping down tomorrow. Doesn't happen every time. Well, here's the count we were using. To be certain this is the right count, I never really gave up on this one. To be certain it was the right count, you really want to undercut some prior lows. We did undercut this one. We haven't undercut this one, but it's this low over here I really want to undercut. But I think it's becoming increasingly likely that this count is going to work. And if it is going to work, then we're in wave blue C down. And blue C should have some kind of Fibonacci relationship to blue A. And the first number we come up with is 4,031.49, but the most likely one is 3,445.78. We don't have to make any commitments to that right now. We just like blue C to look something like blue A. Now it's possible to calculate a target if today's low falls. The June FOMC announcement price was 42.3393. And the first move normally tells you the next major market move, and that was down by over 69 handles. Then there should be another move higher. We got that up 159 handles from this price, and the third leg down can truncate, but typically it's larger than the wave up as measured from the point of the announcement. So we should get a fall of 159.75 handles plus from today's low, meaning we trade under 4,074.18. The first fib target's about 40 points lower than that. So once this breaks, and don't forget this is held today, once this breaks, we're looking for a drop of over 160 handles, and that's not a stop and reverse, that's a target. In addition to the support from the MEJT and the FOMC price we got today, you can make a case for the drop ending here, at least over the short term. You can count an A, a B, and a C from the high. You can count 4 waves of wave C. And when you have a big wave 3 like this, wave 5 often truncates. So at least it's possible we made a short-term low today. I'd be happier if we didn't, because today's pattern is a low to high pattern, and almost always it'll close near the high. And when that doesn't happen, and even if it does happen, when there's early weakness like this, more weakness should be coming. We did get some additional weakness, but usually you get more than that. It just doesn't have to come immediately, but normally you don't have to wait long. But in any case, if we get a truncated fifth wave here, you can at least make the case for a short-term low, even though longer term we should go much lower, as I said. Now this is the volume on the E-mini contract, and this is the continuous contract. And you can see this is more volume than we've had in a long time. We stopped right at the Bollinger Band, right at the 50-day moving average, which you can't see here. But you'll notice volume spikes like this are closely associated with market lows. So the fact that there's a spike here is, again, further evidence we could have hit a market low. Now, of course, it doesn't mean this is the end of the spike. I mean, tomorrow we could spike higher. You can't tell from this chart, but at least you should be on the alert that we are at support, that wave 5 down could truncate, and that even though we should trade lower, you can make a decent case for a bounce if today's low holds. I'm not saying it will hold, but if it holds, you can make a case. Tomorrow's pattern has the early low. We could gap up. Signals are mixed. We use the standard rules. It's positive. We gap down, hit a lower low, closed over all the lows. Either we gap and promptly undercut today's low, or we see higher prices tomorrow. Doesn't mean you have to close higher. There's a wall into the close, so despite the fact that futures are higher as I write this, we can't rule out gapping down smartly. I think early on in a decline like this, if the interpretation's right, all the surprises should be to the downside. It's negative that today's normally bullish pattern closed strongly in the red. The early tank in this pattern should lead to lower price before too much time passes. Doesn't preclude trading higher first. Breadth deteriorated markedly today, so the odds a major high has been made have increased. But the volume spike in the E-mini usually accompanies a short-term low, even if the timing isn't exact, might be off by a few days. Doesn't have to be. So we have more targets. I think we'll see them before too long, but there is support at this low. And if it holds, you can justify some recovery first. I think any recovery here should be a candidate for initiating a short position, because I don't think a move like this is an accident. This should be the start of something big on the downside. Tomorrow's pattern has the early low, and that's today's call.